Hi everyone. Once again, I'm back again, Alan Jones. Want to take a break from the relationship economics theme that I've been speaking on the last few weeks, because another very important thing came up besides the Supreme Court ruling, which I speak about on another tape here. But I want to also mention the President Obama, the new regulation that they're going to impose on Wall Street, just in regards to their ability to invest, the banks to invest money in different types of high risk investments. Basically, the banks have in the past, some banks have been able to invest fairly secure deposits or money that's backed by we the people into high risk ventures. And of course, we bailed them out, so they didn't really have to pay the consequences for that. But even before all that, they were taking our money, investing, and they were insured deposits. So essentially, they were playing with house money. And the president was hoping that the latest crisis last year would reform some of this behavior. But the word on the street, so to speak, is that they've gone back to their old ways. So the president's move, which was actually suggested by Paul Volcker 6 or 8 months ago, last summer, was to change this. And Geithner and some others really didn't want to do this. Bernanke, I think they really want to do this. They really want to kind of let Wall Street be Wall Street and let the capitalist market have its way. But I think we don't necessarily want to swing the pendulum all the way back and just totally lock down the ability for these banks to invest. But I think that there has to be some restrictions on them as well, because unless we reapply all the laws that Reagan, Clinton, and Bush II removed, which were actually put in place back in 1929, not to give a whole history lesson, but we've seen this before, and we think we're all so clever. But back in 1929, they imposed a lot of these regulations and split up banks, investment banks, and insurance companies. They made them all three separate entities, not the cross. That's why J.P. Morgan spun off Morgan Stanley way back in the day, because they wanted an investment arm that wasn't going to be tied, and the other arm would take deposits. J.P. Morgan would take deposits from people and play safe with it. Insurance companies have a responsibility not to insure more than they can cover. That they've got money in their pocket, they can't insure for more than they can actually pay out. And AIG was using, in layman's term, AIG was taking using collateral and other loans they made as security, as collateral for loans they were giving out. So they would borrow from, give a loan out to company A and use the money that's owed to them from company B to collateralize that. But both company A and B are both heavily invested in real estate. So the real estate market crashes, so they can't collect from company B to pay off company A's debt. Essentially, in a nutshell, that's what's going on there. So anyway, but all that came about because of the deregulation thing. And I am a capitalist for sure. But I think the truth of the matter, as I started out saying, is that you have to have a middle ground. You can't just take all the regulations off. And I think President Obama has realized that he's been Geithner, I think, has been right on some things, Bernanke on some things, but Paul Volcker has a point here. We can't do business as usual. Otherwise, we right back in the same situation. We can't rely on the goodness and the kindness of these bankers to do the right thing. I think we have to steer them in the right direction, allow their greed, which is good for capitalism, to run its course within a certain parameter. And that's what regulation is about, is to regulate. Not to stop, but to regulate. Okay? Just wanted to explain that. Don't mean to insult anyone's intelligence or anything like that, but it's a lot of mess, and they count on us not digging into the details. That's what politics is all about these days, and I thought I would attempt to give my take on things, try to break things down. Thank you. Take care.